Hey, it's Sasha Evdokov, April 17th, 2014, and right before the Good Friday. So, April 18th tomorrow, the markets are closed. So, I hope you guys are enjoying your shortened holiday break. And those of you that aren't working, I hope you spend some good time with family and enjoy the goodness out of life. Today I want to focus on entering a trade, and I'd like to kind of do this in a three-part series in terms of entering the trade this week, maybe following through next week, but we'll see where I get to today, because I like to go in depth on these recaps. So today we'll be focused on entering the trade, and I'm not going to be talking about any one stock in specific. I did do a couple of Q&As on Twitter, so if you're not following me on Twitter, you can do so, and you can follow me there. Make sure you're checking the right account, because I do run a couple businesses, and I will only answer trading questions primarily from my my TRADERSFLY Twitter account. I may get to it if from the other account. Just make sure you're on the right account, just because I don't like to mix things up. So make sure you're on this account right here if you're following me or asking me questions. Now, since today I did want to go over a couple of things that people asked about, and I did play a couple of games with you guys to get you thinking about stocks. So I'm going to hit that game first, and I asked about Twitter versus Netflix, and which one looked healthier. And if you just don't even think of the company in general, just pretend this is some company you have no clue what the stock is, which one looks healthier according to the recent couple of trends or charts or patterns. So if we zoom in right here and we look at Twitter for now, just so we have a reference point of what we're discussing or what company, if we look at Twitter, we had a nice break right here, okay? And if we zoom out on the longer term of scale, you can see that it was hitting kind of the lows here, but of course it can go lower, so I never deny that it can't go lower. The lowest it can go is 0. So if we look at just Twitter here on the recent chart, what looks healthier between Twitter versus Netflix that I talked about right here? So and I had a range of responses, and in terms of health, if we just compare it, the answer would be Twitter. And just the health wise, I'm looking at three main components, and it's what I always look at when I go into the stock. And some of you emailed me saying, hey, you know, I got into Twitter, but then it went down the next day. Stocks do not go straight up. It's not going to be 50 shades of green all the way up the minute you buy it. We had a huge day on the upswing right here, and it was a nice volume amount, 24.3 million shares. If you got in it at the 42.60 mark, you would have sold half, and now the stocks will play. They will isolate here. They'll either go up, down, or sideways. And it tends to happen with many stocks. If we break them down here in a minute, they all either go up, down, or sideways, and it takes time to build up to the next part. So here it broke out on 24.3 million, and it came back on 13.9 million. So I'm looking at this box that pops up on these shares, or you can draw the mouse here and see that it's 14 and here's 24. Now today I asked that question right around noontime, and the stock was trading much higher. Now today we didn't get a follow through or push to the upside with the stock towards the end of the day, and that's the other thing I watch, is how do they finish at the end of the day? Do they sell off at the end of the day, or do they push higher? If they push higher into the end of the day, it is a conviction. It's showing you that it has strength and legs in the move. This one, it sold back down, which means it still could be consolidating here. If you got in at 42, 43 area, you're still in the safe zone, especially if you sold some. Now, if we look at Netflix on the other region, or the other hand, the last few ticks and bars, even though, you know, we're looking at this support level just like Twitter, and that's why I picked these two. They have this nice support line about the same spread. You know, just looking at the chart itself. Don't even look at the price, just look at the chart. This one doesn't look as healthy, and why? if we compare it here, 4.4 million shares to a doji here, this is your hammer, okay, and to the upside, again, another doji, we went 2.3 million. So 2.3 up versus 4.4 down. Okay, if we look at the other down ticks, 4.3, 3.6, going up on 2.3. Okay, let me slow it down for you. Going down on 3.6 million shares, but going up on 2.3. Okay, now this one, 4.5 million shares. Today was better. We're coming in right here into this bar, and if we break things down like this, and I'm trying to really simplify it so you guys understand it. If we look at this bar and we extend it further, it's now hitting this bar. How much was in this bar? 5 million shares. And this bar was 3.6 million shares. Okay, and we're going up on 4.5. 5 million shares versus 4.5 million shares. That's probably as slow as I can explain it. Which one wins out? It's obviously Twitter that wins out, and in this side, the downside. So the tick is to the downside. So like I talked about on Amazon, they like to go up. If we look at Amazon, what they do is, you know, we went down here, huge volume, 16 million shares. Okay, went back up. Okay, people could be talking about this for weeks. Oh, it's going back up. I'm like, no. Rolls back over, and where do we end up? That's what they do. That's what stocks do. They're not going to go straight up. Even here, look, they're not going to go straight up. There's a few red ticks in there. Eventually, they come back down. So I want you to pay close attention. Just look and study these charts. Just study them. You know, this one, I don't think it's a healthy, you know, stock in a general sense. If we talk about Twitter versus Netflix, I like trading Netflix a lot more than I like trading Twitter. Why? Because it moves $14, $10 in a day. Twitter, you know, moves 60 cents, you know, 50 cents, 70 cents, $1. But forget the price, forget the company itself. Just look at it in terms of the chart. That's what you learn from the charts. You want the stocks heading higher into the next day. Let me show you another example so you understand. And again, don't particularly care about the company. I'm trying to get you to understand the reasoning behind the trade and why to enter and when to enter and what to watch for. I'm not here to give you stock picks. I'm here to educate you, to take you to the next level so you kind of understand what's going on. Okay, so look here again. We have this trend line right here. This is TPLM if you want to look it up on your own charts or play with the company. Okay, so here's a consolidation pattern. The stock went up, it went down, it's consolidating, now it's going back up. Okay, so where do you make money, or how do you make money? That is the question you're probably asking. Here we have a consolidation pattern. Being patient, sit on your hands until this consolidation pattern breaks, or you catch it on the upswing or the downswing. Okay, so you make money from the market when the market is not balanced. If it's balanced and isolating, you can't make money. So here, there's the line of resistance. Okay, when we compare it to all these other ticks here, what was the volume here on average? Let's just take a middle tick. 1.5 million shares, 1.6, 1 million, 1.3. You know, it's right around that area. One of the larger ones we had was 2.2 million to the downside. Okay, looking at it here, we had 2.2 million. It broke out on 2.2 million. We had 2.2 to the downside. We had 2.2 to the upside. Okay, it's a different price region. If we take this out all the way over here, what tick marks is it hitting? It's hitting this one here, which is 1.8 million. We went up on 2.2, right? 1.8, it went down. If we continue further, okay, let's just continue it further. Now we're getting 1.8 million here again. Isn't that funny? We went down on 1.8 here. We went down on 1.8 here. Here we're going up on 2.2. Very interesting, right? Okay, so let's bring it back a little bit. Okay, again, let's bring it back. Okay, so now that first day broke out. Let's say you entered right here, $8.60, $8.60. Doesn't matter what the price is. Right around that area, okay? Just again, like I said, eliminate the company, look at the chart. Don't worry about the price, just we're using the price as a reference point. Chart is the chart, the way it looks. This is human behavior, what we're looking at. We enter it right around here, this point, right? Little clearance for us, 857, 860, 855, give or take, right there. Comes up, okay, next day, trade again. How much? 2.3 million shares. A little more, but it almost ends the same way as it opened up. Now, it did go up, and then it came back down, and it ended right there, okay? If it went a little lower, it would have closed lower on the day, and you would have seen a red tick right there, but it still would have been fairly positive because it's holding its ground, okay? Depending on the volume, that's what we're looking at, right? So here, looking at this level, it hit the highs here. Where's this high? Okay, we'll take it right around here, okay? And then today, it continued to follow through on 3.8 million shares. Okay, again, $1, it doesn't matter. But look at the way the chart looks. Okay, so if we take it out further, now we take this tick. Look at this, very interesting. 1, 2, 3. It hit a couple areas here. Okay, so we take this tick out further, like I said. Okay, here we have 3.2 million. We have 2.3 million. This one sold off on 3.2. This one is consolidating at 2.3. Now this breakout now is at 3.8. 3.8 versus 3.2. Which one won? This one. 3.8 million won. Now where are we heading into? We're in the $10 zone. So now we're in this region, okay? We're going down here on 2.5 million, 2.1 million, 4.2 million. Okay, this one kind of covered a little bit higher over here. So technically it didn't cover the whole bar. I'm looking at the whole bar here. This bar, 2.1 million. This one, 2.5, and this one half of, 4.2. So we're right around, let's just use 2.1, compare it to what we had, 3.8. Which bar is getting more action? This newer one. That's why you saw the stock go higher. That's how you break it down step by step. And I try to do it slowly, and I apologize if it's a little too slow for some of you people that have my course, because if you have my course, you probably understand a lot of this stuff in terms of theory, but now maybe you get to see it in terms of the chart. And if you're asking me 10, 20 questions on Twitter or on email, then you probably are not understanding what's going on in the markets. Either pick up a book, pick up a course. I don't even care if it's my course. Just learn. Pick up some study material. You don't have to buy my stuff. Buy somebody else's stuff. But study and learn and take your game to the next level. And this is what I do. I look at the stuff, and I do this quick. I do this in about probably a minute, maybe 30 seconds. Sometimes if I know the chart, maybe 5-10 seconds. I will flip through charts so quickly, it'll make your head spin. So that's why I can go through 2,000-3,000 stocks in just an hour or two. So in either case, that's what I watch for, is the price. Where's the price? Is the price higher or lower, or is it in this area, the price? If the price is good, okay, how's the action? How's the behavior, human behavior happening? Is it moving up? Is it moving down? Is it moving with force? Think of a waterfall. Is it a little drippy waterfall, or is it a strong waterfall? Okay, so we got the price, we got the action, which is the behavior, and the volume. Do we have the juice, the high flow of water? And yeah, we do. Think of this volume as voting rights. People go to the politicians to vote for these politicians. The more votes that you have for the stock going to the upside, the more conviction, meaning the more likelihood of the outcome. So the same thing here. A waterfall with high flow of water, you know where it's going. It's like a rocket. With more rocket power, it's going to go to the upside. Okay, so enough about that one. Let's look at one more here. Okay, this one just recently. Okay, so here, MRTN. Again, I don't trade these stocks personally. They don't move a ton, but I just picked them to use as an example of how to enter into the trade. Okay, so here, looking at it, we got 162,000.7. So 162,000 shares traded, and it's pushing higher. and now today we had 261,000 shares and it broke higher. So let's backtrack it. Is there anything here? No, there's nothing here that's making issues or problems for us that we're watching. So compare it to the other volume that's going on. So here now what we do is 162, it broke out, versus the previous day 66,000. That's at least 3 times as much, versus 115,000 versus 72,000. Why am I checking these bars? Well, because this bar covers all these bars. So if one of these bars to the downside was huge, it would be something to be careful of and watch. So here, look, let's take the biggest one, 162.4. It's right around this area. It's to the lower end of that bar. It's not really in there, but it's the highest, 162.4, and this highest one is 155,000. And here we had 162. Who won? 155 versus 162. So 155 versus 162. 162 won, and then here 261. We're going up on 261. This is what you want to see. This is what you want to see on the breakout. We got one day that broke out, second day follow through. If we were looking at Twitter, we got first day breakout, second day no follow through. So is it a little bit weaker than that stock? Yeah, in theory, if we look at chart by chart, yeah, it's a little bit weaker. Okay, just because you see a red thing here versus the Netflix I talked about, 2 green things, it's not about green or red. It's about looking at the action and behavior versus the overall pattern. Like I said, I like Netflix better just because I like trading those kind of stocks, but in terms of just the entering the trade, the price, the action and behavior, and the volume, that's what you're watching. Okay, I hope that was really clear. I know I didn't cover a ton of stocks. I want to actually give you a little lesson today, and I'll go over 1 or 2 more things. CMG, we got earnings coming out. This stock started to pop higher, and I'm going to go into, let's just say 10 minutes. We had this stock popping higher. I had somebody ask me, I don't remember off of Twitter which person, but you know who you are, asked me about Yahoo. Will the stock normally fill the gap? They asked me the previous day, and I said, yeah, typically they do, and it doesn't happen the same day, because we got earnings happening now. It doesn't typically happen the same exact next day or this week. It might happen a week later, but gaps typically fill. They typically do. It's like a magnet. It sucks them down. So today what happened was we did go lower into this gap, and it may continue, or it could continue higher and then later fill it. So what happened with CMG, and CMG is just more volatile than Yahoo. Yahoo's a slower mover, so just think of it in maybe Yahoo doing the same thing within 2 weeks. I don't know. But here's what happens. They open up on the gaps. Okay, so pretend this was Yahoo. You can pretend it's any stock you want. Okay, pretend we open up on earnings. So the ticks start happening. We're watching on a 10 minutes. It's, oh my God, it's up 30 points. First bar happens. We're up on higher volume. Okay, this is what they do. First bar happens. We open up higher volume. It's going to look good. Thing to be cautious about, the gap. Since we're coming into earnings, I want to cover this. We got the gap. Okay, it's going to try and hold here. You'll use this as the base, and now, okay, it's going to try to hold. We got dojis. People are trying to come in to this. So we got a little bit more volume coming into this. So let me zoom in. You can see the volume still much higher than the other days, okay? Continues higher. Okay, now here's the big question. Is it going to clear this high of this bar? Okay, notice I'm looking at the bar specifically. And since this is a 10-minute bar, it's not as strong as the daily bars, but again, gives you some ideas maybe to study further or pick up another book. So here we go, more volume to the upside. This is healthy. Retracement with less volume, okay? Again, we continue, and now all of a sudden, huge spike to the downside. The volume starts increasing. This is your red flag right there. It's breaking below that initial open bar. It couldn't hold that first bar. The volume here, even though the volume on the first bar is higher. It couldn't hold this. You need all three things: price, action, and volume. You had the volume here. It's retracing lower. The action is down. Okay, the price is down. So you don't have everything. You need everything to make it healthy. Doesn't mean it can't go back up on lower volume and so on and so forth. It doesn't mean a stock can't go higher on lower volume or a stock can't go up on looking unhealthy. It just means if you want a healthy stock and if you want a better percentage, you need health. Okay, so again, this was your first sign, and you can see what happened after that. It continued to fill this gap. So here was our close. That's that yellow line right there. The volume right here was higher. Then again, we had a couple of nice higher volume bars. Comparing it to the earlier day, you can see here we had 92,000, 81,000, and here we had 140,000, 115,000. So that's what happened. Then it tested right here. Isn't that funny? Exactly where we closed the previous day. Tested it, couldn't do it. More influx of volume, 304,000. Okay, still this bar, 403,000 versus 304,000. Technically, you could say, hey, it's going down on lighter volume. Yeah, but you don't have the price, and the behavior is wrong. So if you don't have the other two things, the stock isn't correct. You need all concepts, all three things to make it right. Okay, so, and towards the end of the day, as you can see, we continued, and what do we do at the end of the day? That's what I mentioned is, I look at the end of the day, do we have strength or do we have weakness? At the end of the day, higher volume to the downside. It continued to sell off. So here, 1, A to B, B to C, C to D. Okay, continued to sell off towards the end of the day. So if we do this with Yahoo, you know, here we're starting slightly slower, and it's a slower mover. It's 3 cents here, there. It's a different kind of stock, but these are just some things to think about. Again, like I said, I'm sorry I didn't cover, you know, recaps on stock specific. I think somebody wanted me to cover Tesla, but here again, look at what we're doing. Look at the volume. Look at where we are, where we're going, and what do you predict? Okay, and you can break it down into a few ways: A to B, B to C, C to D. Look. If we continue on that pattern, what do you think may happen? You know, there's our support line. Do you think it can bounce? Yeah, it can. I said watch the 200 on this. This is the 200, and I say that because it's right here. And do I always look at technicals versus fundamentals? I always think technicals are more important because when people are in panic mode, they will scream and go, ah, and sell everything. Versus the fundamentals. Fundamentals, usually a stock with good fundamentals will have good technicals and good charts, and that's one thing that my mentor always said was, you know, the good stock charts usually also have good fundamentals, and good fundamentals usually they also have good stock charts. So same thing goes in reverse. So, you know, pick a few stocks on your own and start putting this theory and concept, what I just shared with you, in place and learn from it. Okay, because it's about taking your trading higher. It's not about me making more money. It's not about me boosting my ego about what I know. It's about getting you to, you know, to that next level. And if you are asking a lot of questions, then it might be time to pick up a book, because I'm happy to answer your questions, and I love hearing from you guys. So sometimes, sorry if I don't respond to every single tweet, because sometimes you give me thank yous, and I love seeing the thank yous, but I don't always have the time to respond all the time. But I do try and do it as quickly as I can. You know, it helps having a ton of monitors. But you know, if you're confused about some things, then, you know, pick up a book, pick up a video course. You know, it doesn't have to be mine. Just get something. You know, read some articles online just to kind of study a little more. Trading more doesn't mean you'll learn more. I mean, you'll get it through experience, but it'll be costly. But if you haven't picked up a book, or, you know, checked some video courses out or something like that, then, you know, like I said, pick something up. And it doesn't have to be mine. Just get something to take your trading to a better level. In either case, I do have the book coming out soon. I'm predicting it'll be here next week. I just did the proof. Everything looks good. You know, it's just 100 stock trading tips that very light reading, about 110 pages, so nothing major, but it's very simplified into, a lot of different tips and ideas and concepts just to get your brain thinking. So I hope you guys have a great Good Friday and a fantastic weekend ahead. Plan to enjoy the weekend here as well. We got some thunderstorms happening, I think, soon. So we'll try and make it a good rest of the week. So have a good Friday. Have fun with your families, and trade them well next week. Take care.